on higher education and workforce development will come to order. I note there's a quorum is present. Without objection, the chair is authorized to call a recess at any time. The subcommittee is meeting today to exercise its oversight over the Biden administration's illegal student loan debt transfer scheme. Welcome. This is the second hearing in a two-part series examining the implications of Biden's student loan policies for students and taxpayers. We titled the series Breaking the System because that's exactly what the Biden administration is attempting to do. This, Mr. Cordray and Mr. Kwal. The Department of Education has vastly overstepped its authority. You're operating under a complete executive fiat. Upon my reading of the Constitution, nowhere in the Congress legislative powers delegated to federal agencies like the Office of Federal Student Aid. The first section of the first article of our Constitution is unequivocal. All legislative powers herein lie granted shall be invested to the Congress of the United States, which shall consist of a Senate and the House of Representatives. Yet under the guise of the 2003 law meant to alleviate administrative hardships in dealing with federal loans, student loans for our men and women in uniform, the Department has proposed and implemented sweeping changes to the entire student loan system. Congress has in no way authorized the Department's action of the last 2 years, nor significantly legislated in the area over the last decade. Let me quickly run through the Department's abuses. To start, your department extended the student loan repayment moratorium 6 times. Each time it neglected to provide proper guidance for servicers and borrowers regarding the returning of payment. Rather, educational bureaucrats opted to wait until the 11th hour to announce the moratorium extensions, leaving borrowers scrambling in the dark. Last week, Chairwoman Fox asked Secretary Cardona whether you have received or spoken directly with the loan services about returning to the repayment. Instead of directly answering the questions, Secretary unfortunately obfuscated. We're therefore looking forward to hearing more about those communications today. Next, the department announced blanket student loan cancellations. This plan amounts to a legal wait-and-see strategy in which President Biden knowingly proposed a dubious plan and rule to push the limits of our constitutional order. The next and possible final blow to our broken system is the legal end-around devised by the department, otherwise known as the income-driven repayment. If the blanket cancellation sham cannot pass Supreme Court muster, the IDR and other backdoor cancellation schemes like borrower defense to repayment will effectively achieve the same goal. Let me put this in perspective. President Biden has signed 3 bills this year, just 3. One to end the pandemic, one to reform DC's criminal code, and one to declassify intelligence related to the COVID-19's origins. Meanwhile, the Department of Education has submitted billions of dollars of regulations completely reshaping the post-secondary education. When in the world did unelected bureaucrats at the Department of Education and so-called nonpartisan leaders of the federal student aid become legislators? The department's actions are not a fix. Instead, they only exacerbate the long-term structural problems of college costs. Indeed, in 1987, the then Secretary of Education, William Bennett, foreshadowed the mounting problem, saying, if anything, increases in financial aid in recent years has enabled colleges and universities to blithely raise their tuitions, confident that the federal loan subsidies would help cushion the increase. Study after study have shown, unfortunately, that Mr. Bennett was spot on in his assessment. In fact, the Congressional Budget Office recently estimated that the administration's IDR plan will lead to a 12% increase in student borrowing, largely due to increase in tuition. It is a taxpayer who will ultimately foot the bill for this reckless proposal. Taken together, the Biden student loan scam would cost taxpayers up to $1 trillion when it's all said and done. Simply put, America cannot afford it. America is broke at the tune of $32 trillion. Every borrowed dollar is inflationary, and according to the Committee for the Responsible Federal Budget, the administration's blanket cancellation plan would increase inflationary pressures by 15 to 27 basic points. Americans will not soon forget this inflationary havoc already wreaked and wrought by this administration. All in all, we need to put a stop to the Biden's radical, costly, and unlawful student loan scheme. These starts with fixing a broken and unaccountable executive branch, and for that reason, I'm glad we're having this hearing today and conducting the robust oversight. As always, sunshine is the best disinfectant. With that, I look forward to a productive discussion and yield to the ranking member for her opening statement. Ms. Wilson.
Thank you, Chair Owens, and good morning. Thank you, Undersecretary Kwal and Mr. Cordray, for taking the time to provide us with your testimony. Welcome to the Education Committee. Before I begin, we need to acknowledge that today marks the one-year anniversary of the horrific killing of 19 school children and 2 educators in Uvalde, Texas. There is no excuse. We need to put politics aside and prevent these tragedies from taking the lives of our children. No more, no more. As a nation, we must do all that we can. During the Biden administration, the Office of Federal Student Aid has taken historic steps to end the student debt crisis. President Biden has held steadfast in delivering his plan to forgive up to $20,000 in outstanding federal student loan debt. Unfortunately, Republicans are denying students, including an estimated 114,000 borrowers in my personal district, the relief they urgently need. My Republican colleagues say, too bad, deal with it, suck it up, even though they were willing to charge taxpayers $1.9 trillion for a package of tax cuts that overwhelmingly benefited large corporations and the wealthy. This is hypocrisy, plain and simple. My Republican colleagues are unwilling to support their own constituents, roughly 20 million student borrowers. They have dedicated this hearing to attacking mostly middle-income borrowers who would benefit from student debt forgiveness while our country rapidly approaches default. This century alone, we've raised the debt ceiling 21 times, but my Republican colleagues seem to believe that threatening default is an appropriate strategy to achieve their extremist agenda. Due to the GOP's recklessness, Americans in districts served by Republican members of this subcommittee are at risk of losing their jobs, 93,500 across their districts, just their districts. Over 1,300,000 households in these districts are at risk of not receiving their Social Security checks. Listen up, their Social Security checks are at risk. In contrast, House Democrats remain committed to tackling the core problems that caused the student debt crisis in the first place: the declining value of the Pell Grant, chronic state disinvestment in public higher education, and our flawed student loan system. The student debt crisis affects Americans of all ages. A constituent in my district recently emailed me to share that as a senior citizen, he's still struggling with more than $100,000 in student debt due to loan interest capitalization. His story and many others from my constituents led me to introduce the Lowering Obstacles to Achievement Now, the Loan Act. The Loan Act doubles the Pell Grant, It improves the public service loan forgiveness program. It caps interest rates on new loans at 5% and makes other critical reforms to make our student loan system work for students. Simply put, the Loan Act will make student loans cheaper to take out and easier to pay off now and in the future. We cannot afford to continue leaving our constituents behind by failing to end the student debt crisis. Under Secretary Kwal, Mr. Cordray, I look forward to discussing how legislation like the Loan Act would build on your work to deliver on our promise to student loan borrowers, their families, and our economy. And I yield back.
Thank you, Ms. Wilson. Pursuant to Committee Rule 8C, all members who wish to insert written statements into the record may do so by submitting them to the committee clerk electronically in Microsoft Word format by 5 p.m. 14 days after the date of this hearing, which is June 7th, 2023. And without objections, the hearing record will remain open for 14 days to allow such statements and other extraneous material referenced during the hearing to be submitted for the official hearing record. I will now turn to the introduction of our two distinguished witnesses. The first witness is Honorable James Kwal, who is the Undersecretary of the Department of Education, where he leads the post-secondary educational policy for the department. Second witness is Mr. Richard Cordray, who is the Chief Operating Officer of the Office of Federal Student Aid within the Department of Education. We thank both witnesses for being here today and look forward to your testimony. Pursuant to committee rules, I would ask that you limit your oral presentation to a 5-minute summary of your written statement. I would also like to remind the witness to be aware of the responsibility to provide accurate information to the subcommittee. I'd first like to recognize Mr. Kwal.
Thank you, Mr. Chairman, Ranking Member Wilson, and distinguished members of the subcommittee. I appreciate the opportunity to be here today to talk about the U.S. Department of Education's efforts to address student loan debt, remedy the economic damage to families and communities, and prevent future unaffordable debts. I'm honored to testify alongside my partner, Richard Cordray, the Chief Operating Officer of Federal Student Aid, and a principal leader who puts students first. Each year, the department's student financial aid programs help 18 million students pursue a tremendous variety of goals, including both blue and white-collar careers. Graduates of colleges, universities, and trade schools enjoy higher salaries, lower rates of unemployment and poverty, and other benefits. With more graduates, we all benefit from a stronger, more productive economy. However, the student loan program has grown so large that it siphons off many of the benefits of college. Some students are left worse off than if they had never attended college at all. 1 in 3 borrowers never graduates. They are left with debt but no degree. Historically, more than 1 million borrowers default on their loans every year. And after a decade in repayment, typical black borrowers owe more than they originally borrowed. These debt burdens are shared not only by borrowers, but by their families and communities. Student debt discourages careers in public service, delays home ownership, cuts into retirement savings, and makes it harder to start businesses and save for their own children's education. The Biden-Harris administration is tackling student debt by offering relief from the continuing economic effects of the pandemic, while providing targeted debt relief and making loans more affordable to repay than they ever have been before. By investing in Pell Grants, free community college, and scholarships at inclusive institutions, and by holding colleges accountable for college costs. In March 2020, in response to the COVID-19 pandemic, the department paused collections and interest charges on federally held student loans. Now, as we wind down pandemic programs, the department is committed to helping borrowers return to repayment without suffering delinquency and default. That starts with the Secretary's plan to cancel up to $20,000 in student debt. Nearly 90% of eligible borrowers live in households earning less than $75,000 a year. As the Supreme Court considers this program, tens of millions of borrowers are eager for clarity. I'm confident in the strength of our legal arguments and hope we will be able to deliver this relief soon. In the meantime, we are finalizing the most affordable repayment plan ever. Under our proposal, no one earning less than about $32,000 a year, about $15 an hour, would owe payments. Payments on undergraduate loans would be cut in half from 10% of discretionary income to 5%. No one making payments would see their balance grow due to runaway interest, and it would be simpler and easy to choose among repayment plans. We have also identified 2.2 million borrowers who are already eligible for forgiveness under existing programs like public service loan forgiveness, total and permanent disability discharges, and borrower defense. We also need to invest in student aid so that future colleges can afford to complete college without taking out unaffordable loans. Over the past 2 years, Congress and President Biden have increased the maximum Pell Grant by $900, helping 6 million students. Additional increases are needed to reach more students and reverse the long-term decline in the purchasing power of this program. President Biden's budget also proposes making community college tuition-free, building on momentum from Maine to New Mexico, and to create new scholarships for students at historically black colleges and universities, tribal colleges, and minority-serving institutions. Finally, colleges must be accountable to students and taxpayers for college costs and unaffordable loans. We are enforcing the laws through a stronger borrower defense rule, a revived FSA enforcement unit, and new policies holding problematic owners and executives personally responsible for wrongdoing. Unaffordable debt disproportionately comes from for-profit colleges, and the department recently proposed a new, stronger gainful employment rule that would set standards for debt and earnings at career and for-profit programs, protecting 700,000 students a year. We expect colleges to respond by offering better value, but if they won't, students can find better choices. Because no college should routinely leave borrowers with unaffordable debt, we are also informing students on the value of their programs at all types of colleges. Together, this plan will build a stronger economy and offer permanent solutions to student debt. Thank you. I look forward to your questions.
Thank you. I now recognize Mr. Cordray.
Thank you, Chair Owens, Ranking Member Wilson, members of the subcommittee for the opportunity to testify today. Glad to be here in person, alongside my friend and partner, Undersecretary Kwal, about federal student aid's important work. The Biden-Harris administration and Secretary Cardona's priority to make post-secondary education more accessible, more affordable, and more accountable continues to guide our work at FSA. Since I last testified, we've been working to support FSA's broader mission to build America's future, one student at a time. FSA's top priority each year is to provide students and their families with reliable, uninterrupted access to federal student aid to pursue post-secondary educational opportunities in all forms. For the past 4 years, we've been delivering a phased approach to execute the Future Act and the FAFSA Simplification Act, 2 laws that you passed to expand access and improve the entire student aid process. The resulting new FAFSA form is the most ambitious redesign of the federal student aid application and delivery system in decades. The streamlined 2024-2025 FAFSA form will make it easier and simpler to apply for and receive financial support, which will unlock access to post-secondary education for more students. We know this is a significant change for our many partners who will get financial aid into the hands of students. Our roadmap of new resources will help students, families, counselors, and schools make the best use of the new form, with more to come in the months ahead. FSA serves students across the full life cycle of student aid. This means ensuring that millions of borrowers have affordable options to repay their loans, such as income-driven repayment plans that reflect their economic circumstances. We're making one-time account adjustments to address past inaccuracies and improper practices by loan servicers. These efforts will rectify long-standing problems for millions of borrowers. We are also targeting relief to borrowers who qualify for established loan forgiveness programs by fixing historical flaws. For example, the department announced changes to ensure that public servants can access forgiveness despite the challenges of the pandemic. We've heard from teachers, police officers, firefighters, social workers, and many others who describe the life-changing effects as we finally fulfill the promise Congress made to provide relief for those who choose to put community over self. We are also intent on protecting the investment made by all students pursuing higher education. To hold schools accountable for malfeasance in the Title IV programs, we're rebuilding our enforcement office, bolstering our school oversight work, and joining with state and federal partners to prevent or mitigate risk to both students and taxpayers. FSA's emphasis on accountability also extends to loan servicing as we implement the unified servicing and data solution to better meet the needs of all those with student loans. We recently awarded new contracts with long overdue changes, this has been 7 years in the making, to the repayment system to improve borrower outcomes by preventing delinquency and default. Ahead looms the unprecedented task of returning tens of millions of borrowers to repayment after a pause that was extended multiple times during the pandemic. For those with steady financial circumstances who know they can make their payments, we urge them to enroll in our auto debit program to avoid missing any payments when they come due. For those borrowers who will struggle to make their payments, we encourage them to explore and sign up for a more affordable income-driven repayment plan. Everyone with a stake in this upcoming event, schools, servicers, advocates, and public officials like yourselves, can help us drive these key messages in the months ahead. Our support for borrowers reentering repayment includes those previously in default. Through the Fresh Start initiative, we're eliminating the negative credit effects of default and have restored eligibility for federal student aid, enabling these borrowers to get their lives back on track and complete their credential or degree. A key prong in returning borrowers to repayment was the President's announcement to provide one-time student loan debt relief for tens of millions of eligible borrowers. The goal is to ensure lower and middle-income borrowers are not left in a worse position with respect to their loans because of the pandemic, so they can return to repayment without entering delinquency or default. There is no doubt the program will advance these goals. The application process for debt relief was simple and straightforward, and FSA approved 16 million borrowers before opponents obtained court orders blocking it. The Biden-Harris administration remains confident in its legal authority to provide this essential relief, and FSA will deliver it to deserving borrowers once allowed to proceed. The work we do at FSA supports students and borrowers in each of your districts, yet our ability to deliver on this important work will be jeopardized without adequate funding. We will continue to work together with you to achieve these common goals. Thank you, and I look forward to your questions.
Thank you. Under Committee Rule 9, we'll now question witnesses under the 5-minute rule, and I will begin the process. Mr. Cordray, do you believe that all institutions should be subject to the same standards? And do you believe your job as the Chief Operating Officer is to operationalize the law and regulations equally to all Title IV institutions?
Yes, sir, I believe that the law applies to all entities equally.
Thank you. Is your position, is it a priority the success of the student or a particular institution segment?
I'm sorry.
Is your priority the success of the student or the success of an institutional segment? Public schools, private, I mean, where's the priority?
I think our goal is both. We want students to succeed, but they can only succeed if the schools that serve them succeed
So
as well.
it should be the student then. In other words, it's about the student, right? At the end of the day, the segment should be, if the student's succeeding, then the segment should be succeeding then. Am I correct on that?
I believe that if students succeed, it'll be because schools have delivered for them. Yes.
Okay. So then you would agree then it should be looking at the students, the outcome, not only graduation, but also the introductory into the segment and the business segment. Those two outcome issues should be a part of that equation, correct?
I think the goal of our system is to provide higher education of
No,
many
I'm sorry.
kinds.
I only have a little bit of time. So
Okay.
is it about outcome? Success of graduating and success of getting a job when it's finished. Is
Yeah,
that,
I think it's about process and
okay.
outcome. Yes.
Thank you so much. Okay. This committee continues to be troubled by the FSA's department's laser-focused opposition to all things that are for-profit tax status while turning a blind eye on nonprofit and public institutions that graduate students with high debt and poverty-level wages. Back in June of last year, Chairwoman Fox sent a letter requesting all memos received from the Debt Collective. Are you familiar with that letter?
Generally, yes.
Okay. I want to submit to the record. We finally got this a couple weeks ago. Do you recall the meeting you had with the Debt Collective?
Beg your pardon?
Do you recall the meeting that you had with the Debt Collective?
Not in detail, no.
Okay. Well, it seems that you were impressed by the meeting and a memo to the regarding that provided to the department. Do you remember that memo that you sent out after meeting with them?
Again, as a general matter, yes.
Oh, okay. Well, this is what we understand as you forward the memo over to the head of FSA Department Office of Enforcement. Office of Enforcement, Christine Donahue. Please read this extremely interesting memo, and then we can discuss. After you, Ms. Donahue, and others reviewed the memo, it seems like we kind of took from their playbook of what they wanted to have happen. Now, just so you know, for those who don't know the debt collector, just want to make a quick point. Go to the website. They're for free college, free housing, free everything you possibly think of free. It has nothing to do with what I can see with education, but they had a front row seat with your department. Yes or no, has the FSA and department released guidance under this administration on misrepresentation?
On misrepresentation?
Yes.
Well, we're building an entire enforcement office
Yeah,
about
I'm
stopping
sorry.
misrepresentation
I'm sorry.
by
We're going
schools.
around. Yes or no?
But again, we are building an entire enforcement office to address misrepresentation by schools
let me just
that
say
harm
this.
students.
The debt collective memo instructed FSA to investigate misrepresentation, so yes. Has the FSA and the department released regulations on the administrative capability under the administration, yes or no?
I believe we have, yes.
Okay. The debt collective memo instructed FSA to pursue administrative capabilities investigation. Has the FSA and the department released guidance under this administration on personal liability, yes or no?
Yeah. May I hear?
No,
All of
I'm
the same
sorry. I'm
things
running
that
out
you're
of, I'm
talking
sorry.
about are
I'm
things
sorry.
that Congress has directed us to do as well.
Okay, well, the debt collective memo instructed FSA to acquire personal liability.
Nobody instructs us. They can advise, they can encourage. We just make our own
my
decisions.
point is you're following their instructions. They're asking you to do this, demanding it in this memo. They demand it, and it seems like it's found its way into the department here. So there's an additional section on the debt collective memo that caught my attention. Let me read it to you. Education Department is focused on minnows while ignoring sharks. FSA must immediately rescind the 2011 guidance that allows institutions to enter revenue-sharing agreements with third-party servicers. In February 15th, the department responded to the debt collective memo's direction by announcing the public commitment period to understand the impact of the bundle service exception. We'll have a chance to talk a little bit more on this. I would hope. I'm sorry, I'm out of town. I would suggest that when the debt collective, which is anti-business, has nothing to do with education, can have a front row seat with the department, and you find their way into this, we have some real concerns about that because these people do not like business ownership. Period. So with that, I'll yield back my time to.
I hear your comment. Could I just? Like yourselves, when we hear from constituents, they make a lot of suggestions. Sometimes they're good suggestions, sometimes they're not. If
Do
they're good
they have
suggestions,
anything
we
to do with
take them.
education?
If not,
do
we
they have
don't.
anything to do with education, this group?
Beg your pardon?
Does this group have anything to do with education?
I don't really know much about the
No,
group
it
you're
has,
talking about.
it has to do with getting freebies and canceling debt, period. Nothing to do with education. So they should not be sitting in the front row of dealing with business owners and those who are trying to make this education process work. I want to yield back my time to Ms. Wilson.
Chair Owens, thank you. I find it incredibly hypocritical and a double standard that my Republican colleagues welcome government bailouts for banks and other industries, but not for hardworking students. We recently bailed out Silicon Valley Bank and Signature Bank and didn't hear a peep from my colleagues, Republican colleagues, not one solitary word. There was no outrage when we bailed out the airline and the car industries. There was no opposition to the nearly $2 trillion tax handout to the ultra-rich. There wasn't a single Republican press conference to express concerns over members of Congress having their PPP loans forgiven. We know who they are. It was all over the news. But my Republican colleagues support bailouts for everyone but our students. It's an ugly double standard. Our children deserve a break. Higher education provides so many benefits to the American society and to the economy. Mr. Kwal, I've heard several times that my colleagues across the aisle that the reforms instituted by the Biden administration are unfair to taxpayers who did not attend college. This is obscene because very few federal programs will affect every single person in this country. Why is it important for the Department of Education to implement targeted relief programs such as one-time debt relief and IDR account adjustments for borrowers?
Thank you so much for the question. We've seen student debt get to a point where it is challenging not just for borrowers, but for their families, for their communities, when borrowers are struggling to buy a home, to start a business, to save for retirement or their children's college. And that's particularly true now as we are emerging from the pandemic. And so the relief that the president is offering borrowers will help strengthen the economy, encourage people to go to college and have benefits for not just borrowers, but also their families and communities.
Thank you. Mr. Cordray, in 2021, I hosted a briefing with the Barred Prison Initiative highlighting the importance of higher education in reducing recidivism amongst formerly incarcerated individuals. With Pell Grant eligibility for incarcerated individuals arriving in July, how will FSA ensure equitable and widespread access to these newly available funds?
Thank you, Ranking Member Wilson. And I know this is a priority that you and the chairman share, which is second chance for people and an opportunity through education to better their lives. This is something the department also shares and takes very seriously. And we've been working on this on a number of fronts. Mr. Kwal could speak more specifically to what we're doing through the rulemaking process to try to improve the opportunities for people in that situation. And it is something that we're glad to keep you posted on exactly what our progress will be, but it is a priority issue for the department.
Thank you. Mr. Kwal, I was pleased to see that last year the department moved forward with regulations to eliminate most instances of interest capitalization for federal direct loans. Can you share more about the harms of interest capitalization for borrowers and their loan balance, and share why it is important and crucial to eliminate it?
Well, it's a challenge we often hear from borrowers, including the one you referenced in your opening statement, who see their loan balances grow and grow, often even when they're making the payments that they're required to make, the payments that they can afford. So through regulation, we took a look at requirements at which interest was capitalized, which would mean we would charge interest on interest, to try and reduce that impact of having borrowers get deeper and deeper in debt. We are also proposing in our new student loan repayment plan to make sure that if you are making the payment that's required, you don't see the loan balance grow over time nonetheless.
Thank you. Go ahead. I was pleased to see that the president's budget includes a second year of funding for post-secondary college completion fund for retention and completion grants. Can you speak more on the importance of utilizing evidence-based practices to improve student post-secondary outcomes and why this is a priority for the department?
Well, one of the exciting things we've seen in recent years is that colleges and universities are finding more ways to help many more students graduate and go on to a career and a better life, students from all kinds of backgrounds. So we're very grateful for this investment to help more colleges do the things that work and bring opportunities to more students from all backgrounds.
Thank you. Thank you so much to both
Thank
of
you. First of all, I'd like to also, before I get started, I'd like to submit this to the record, debt collective memo that we talked about this before. I'd like to recognize Mr. Thompson from Pennsylvania.
Chairman, ranking member, thank you very much. Gentlemen, thank you for being here. Mr. Kwal, when Secretary Cardona testified before this committee 2 years ago, he unconditionally supported the concept that the department should hold all post-secondary institutions equally accountable. Now, I share this goal, as I believe most, if not all, members of this committee do, so we can address the root causes of the student loan crisis. Just last week, the department published its proposed gainful employment rule, which again treats proprietary education and non-degree credential programs different when it comes to whether students can use taxpayer dollars to attend them. While the department claims that more information about outcomes is is sufficient to protect the 95% of students who enroll at a nonprofit college from low-value programs. It threatens to cut off the Title IV eligibility for programs at career colleges who, quite frankly, have the exact same or better outcomes than their nonprofit peers. Mr. Kwal, given that the department apparently has the authority to create universal accountability across all schools, as well as Secretary Cardona's commitment to holding all colleges equally accountable, why has the department proposed an incomplete accountability framework?
Well, I appreciate your question and agree that no college should be routinely leaving students with debts they can't afford to repay. We do see that problem concentrated in for-profit colleges. They enroll about 1 in 7 students and produce about half of unaffordable debts. Congress has distinguished between for-profit and career programs on one hand and traditional higher education programs in the Higher Education Act, and requires only the former to meet gainful employment standards.
So your answer basically, you found the cause is rooted within the Higher Education Act for that discrimination?
The statutory authority for us to issue a gainful employment rule is grounded in Section 102 of the Higher Education Act.
Well, let me turn to the Higher Education Act. That just a reminder, just because it's written in the Higher Education Act, that this department has violated the Higher Education Act on multiple occasions as it relates to the student loan program. So it's curious why you're citing that reason now.
Well, respectfully, every action we've taken, we have done with careful consideration and discussion over our legal authority, and we feel very confident
Well,
that...
I would just encourage you to go back and do more due diligence, because I think it's some pretty obvious in areas where you have violated the Higher Education Act. If that is truly the reason for that form of discrimination against those students that are seeking, obtaining, and by and large getting great futures with carrying significantly less debt when it looks at career colleges. Mr. Kwal, as my colleagues and I often note, a budget reflects one's priorities, and nowhere in the president's budget does it mention accountability through gainful employment or other means for all colleges and universities, despite specific language calling out career programs. Now, do you believe that programs at public and private nonprofit institutions that leave students and taxpayers worse off financially for investing in them should continue to receive access to federal student aid? Yes or no?
Well, I think that no program should be routinely leaving students with debts they can't afford to pay.
Well, but
that's
my
unacceptable.
question is, which is fine. So you're inferring then you would agree that programs at public and private nonprofit institutions that leave students and taxpayers worse off financially should not receive access to federal student aid, since you said that no program should be doing that.
Well, we need to address these programs at all types of colleges and universities, but it may be that different tools are appropriate in different contexts.
Right. So why the discrimination against career and proprietary when we should be looking at, again, as the chairman pointed out, not at the institutions, but at the students? We're driving this by student outcomes, right? We want them to be successful in life, and I do believe education is a pathway to opportunity. So why it's pretty tough to do that if you're coming across with a discriminatory approach here, and and claiming it's because it's grounded in the Higher Education Act, despite the fact that seems like that's being rather used loosely. So I would encourage that all institutions would be held to that accountability. And I think it'd be a great first step to following through with that commitment. It would be to extend the 30-day comment period for the 1,000+ pages regulatory package that included the new gainful employment proposal. And I would ask your Mr. Chairman, I know I'm over time, but I ask unanimous consent to submit a letter from former Undersecretary Mitchell into the record that would support that.
Without objection.
And Mr. Kwal, I would just ask for your commitment to extending the comment period an additional 30 days so the department can work with Congress to develop an accountability system that works for institutions, students, and taxpayers.
Well, we are committed to considering public comment. We've been engaged in this process since negotiated rulemaking sessions over a year ago, and the length of our comment periods is consistent with our practice over multiple administrations now, but we will carefully consider every comment that we receive.
Thank you. Thank you so much. Mr. Takano.
Thank you, Mr. Chairman. Mr. Kwal, Mr. Cordray, thank you for being here today. I think it's critical we clarify what the one-time debt relief that was actioned by President Biden is. The administration announced a plan to forgive $10,000 of student debt for non-Pell recipients and $20,000 for Pell Grant recipients with an individual income under $125,000 or a household income under $250,000 for a couple. Now, I believe it is paramount of paramount importance to stress that 90% of the relief will go to borrowers earning less than $1,000. Is that correct, gentlemen?
Yes.
Mr. Kwal, this question is for you. Was the administration's executive order a complete debt forgiveness for all student borrowers?
No, it was targeted at borrowers that we thought were likely to be delinquent or default, as you've outlined, Mr. Takano.
And it seems to me the maximum amount that can be forgiven was for Pell Grant recipients up to $20,000. Is that right?
That's correct.
I know this is not your area, but do we know how much PPP loans could be forgiven? Do we have off the top of your head?
I know it's substantially larger sums than
Well,
that.
I'm just looking quickly at something that I looked online for. The Pandemic Response Accountability Committee that tracks pandemic relief funds. This is a year ago. I don't know what the numbers are, but we can figure them out. But I'm reading that PPP loans, people could get, found that the average amount of loan forgiveness was $72,500, $50,000 more than we can get a student. I mean, that's just, I mean, I'm sure, I remember passing these PPP loan, it was a loan, but as long as you spent that loan on payroll, you could get all of it forgiven. Up to 100% of that loan could be forgiven. Was there a pandemic connection and justification for why the president established this loan forgiveness program?
Yes, the loan relief is intended to be to help borrowers through the economic effects of the pandemic as loans return to repayment.
And do you gentlemen know, as far as you know, the CRA offered by Mr. Good today, which would essentially overrule the president, would that go beyond denying his targeted program? Would it also affect those who have had their student loans paused? Would they be liable if we passed a CRA to pay back the money that they were paused on during the pandemic?
Well, the CRA does address the student loan pause, and I've seen different legal opinions about whether it is retroactive or exactly how it would affect borrowers, but I think it is clear that it would be very disruptive and very confusing and make it challenging for borrowers to return to repayment successfully.
Well, I just want to point out, Cal State San Bernardino, one of the public schools, public higher ed schools under the Cal State system in my home state of California, is making great strides to ensure students are graduating with low and manageable debt levels. The average undergraduate debt load for a CSUSB Pell recipient is $10,000 to $12,000. And for a CUSB student graduating without Pell Grants, their debt load is roughly $17,000 to $18,000. Cal State San Bernardino is a Hispanic serving institution, and for a fair number of first-generation students attending, the difference between $10,000 in debt and $17,000 in debt is really substantial. What did Congress and the President do in the last administration for Pell Grant recipients specifically? Was there an increase?
Over the last 2 years, we've increased Pell Grants, Congress and the President, by $900.
So this differential between the indebtedness of Pell Grant recipients is rather significant, $10,000 versus $17,000. Mr. Cordray, I'm interested in learning more about the default rates for student borrowers. Do you have a sense of what types of students default the most? what kind of schools they go to?
Typically, they are in high numbers students who were failed in terms of their own education. Were not able to complete their education. They started financially difficult circumstances, and those circumstances ended up defeating them. Or the schools that they attended failed them and did not provide them with a quality education. That's a high number of the people who end up in default.
Do they tend to attend, what we call for-profit colleges? Is that stronger debt load?
The risks are based on data, and the data show that, yes, there is a higher level of failure at for-profit schools than at not-for-profit schools. That is undeniable.
Yeah, well, just last week, the department released its proposed rule on gainful employment and a final rule on defense to borrowers. Republicans have attacked these rulemaking as an attack on for-profit colleges. It's unfortunate that they have characterized it that way. I think they're protecting the American taxpayer. I yield back.
Thank you. And I'd like to recognize Mr. Groffman, Pennsylvania.
Thank you. We'll start with Mr. Cordray here. You used to be head of the CFPB. If a financial institution gave debt to a borrower expecting the borrower could not afford it, would you consider that predatory?
It would depend on the circumstances, but it certainly could be, may not be.
I don't. So yes or no, you'd say it depends. We don't know.
I'd say it depends on the circumstances.
Okay. At CFPB, what were the consequences of predatory lenders? What did you do with them?
Well, the predatory lenders is a label. The question is somebody doing something that violates the law? If they're violating the law, we would enforce the law. If they're not violating the law, we'd let them go on their merry way.
Well, I guess I'd say in general, is predatory lending against the law?
Again, there's quite a bit of predatory lending that is against the law.
Okay,
It may not be that all of it is.
You think it's a bad thing to be a predatory lender?
Are you asking my personal view? Yes, I think it's a bad thing.
Good. That's a step in the right direction. Now, how should Congress or the department hold you accountable for the so-called Fresh Start initiative announced last April to provide defaulted borrowers full access to additional loans? In other words, people have already defaulted. Now we're going to give them additional loans, no question asked, without any indication of their ability to repay. If they were issued a death sentence, why are you issuing another loan?
So the Fresh Start initiative is closely related to the circumstances of the pandemic. During the pandemic, those in default were not required to make payments on their loans. They were subject to the pause just as all borrowers were, and therefore there were months and months, now going on almost 3 years, where they did not fail to make their payments. And it was thought appropriate to provide a second chance, the Fresh Start program.
So up the loan.
Beg your
Up the
pardon?
loan.
Say that again?
You authorized upping the loan, a bigger loan, because they weren't able to repay the last one.
I don't know about a bigger loan. I would say this, that those who had been in default, who came out of default during the pandemic pause, were allowed, we corrected their credit score to reflect their current situation, and we enabled them to apply for federal student aid and try to complete the credentials that very often defaulted borrowers found that they never completed in the first place, and that's a big part of their problem.
I think that's a questionable policy, and it hurts the populations of students that the administration claims to care about. I mean, we have a problem with too many people are taking out loans they can't repay. Prior to April 2022, did the department communicate directly with the servicers or guarantors about your actions?
We communicate with our servicers on a routine basis, multiple times a week, often multiple times a day. We're in constant communication with our servicers.
And again, between April of 22 and August of 22, did the department communicate directly with servicers, institutions, or other stakeholders about the implementation of Fresh Start?
We again have communicated our policies to our servicers. That includes Fresh Start, where we also communicated publicly.
If you say, and I'll ask again, in December of 2022, so just a few months ago, the department released a Dear Colleague letter to guarantee agencies about Fresh Start. In the 5 months between August and December, did the department provide direct official communications to servicers, institutions, or other stakeholders about Fresh Start?
So again, Dear Colleague letters are public. Servicers have access to them as well. I know they watch them closely. We have discussions with the servicers constantly, day to day, week by week, month by month. They're well aware of what we're doing, and we have discussions, and they have opportunity to have discussions with us.
Okay. Throughout the Biden administration, student loan servicers and guarantee agencies have been left in the dark, we believe, and the fact that these partners and 7 million defaulted borrowers are left at the mercy of what we consider policy by press release approach of your agency is shameful. But I have a question for you in general.
Okay.
Do you believe that a lot of people are going to college in this country when they would be better going off to tech school or trade school? I say this as someone who tours my tech schools and trade schools and finds students who go there already have a 4-year degree that they got no value out of, or started towards a 4-year degree and didn't complete. So you got people in essence with 4-year degrees and no value. Does that bother you, and are you doing anything to prevent so much of that happening in the future?
I very much agree with you on this, sir, and we've been learning from those of you in Congress who have raised up the importance of trade schools and skill-based programs. Just yesterday, I was on the third of what is an ongoing tour of trade and skills-based programs to help people understand that federal student aid is available for those programs just as much as it is for traditional academic programs, and in many cases provides better value to the student, and that's something that we very much agree with you on.
Well, hopefully you'll push that, and I'm glad you're listening to what we're saying here. That's very, very encouraging.
Thank you. Now I'll recognize Mr. Scott.
Thank you, Mr. Chairman. We'll continue on with the work on the servicers. One, we found out during the public service loan forgiveness fiasco that a lot of students weren't aware of what their rights were under that program. Are you working with them to make sure that all of the students are in the proper program, not only in public service loan forgiveness, but also in the appropriate income-based program?
Yes, we are.
And are we making improvements on that?
Yes.
Okay, now, are parents on Parent Plus loans eligible for public service loan forgiveness? If you have a teacher that has a child that is in college and they took out a Parent Plus loan, is the parent eligible for public service loan forgiveness?
Not under current rules.
Not under current rules?
No, sir.
We've had mention of the challenge of high interest rates. Does the department have the authority to reduce interest rates?
Well, the interest rates are set by Congress. This is something that we hear a lot about from borrowers who feel interest rates are excessive and make it challenging for them to pay down their loan. And we have taken steps to reduce interest capitalization and also to reduce unpaid interest through
But you need congressional authority to reduce the interest rates?
The interest rate itself is set by Congress, yes, sir.
Okay, and you mentioned plans on Pell Grants, that you've had success in increasing Pell Grants, which used to cover, a couple of decades ago, 80% of the cost of going to a state college. Recently, it's below 30%, and that's where the student debt has been coming from. Does the department have plans to continue increasing the Pell Grants so that the students will have to take out less debt?
Yes, sir. The president requested another $820 increase in Pell Grants this year and has a path to doubling the Pell Grant within a responsible budget by 2029.
Thank you. We recently, about 2 years ago, sent a letter to the department asking for for-profit executives and owners who are personally responsible for fraud and personally profited from fraud to be personally responsible for the borrower defense that the government has to end up paying. What are you doing to make sure that they are personally responsible for not just a normal business failure? I mean, that happens to people, but when they personally are involved in the fraud and make millions of dollars, are they getting away free?
I remember you asking me this question when I was here last virtually, and I told you at that time that we would press forward on that, and we have. We've been trying to move carefully and with determination, but we have first imposed clarity around entity liability, and that's been in place now for more than a year. And we have recently clarified that there is accountability for personal liability as well, and that's something we're now looking at in all of our investigations.
Now, we want to make sure that this only applies to those who were personally involved in the fraud and profited from the fraud, not just executives who had a normal business loss. Are you making that differential?
Absolutely correct.
The gainful employment rule, some of us have had concerns about gainful employment because to some extent it measures the socioeconomic demographics of the student body as much as it does the quality of the program. If you have a student body full of sons and daughters of business owners, of course they're going to get jobs regardless of the quality of the program. If you have first-generation people who may be minorities subject to discrimination, they'll have more challenges getting jobs. Have you done anything in the gainful employment to address that problem?
Thank you for the question. The goal of the gainful employment rule is to create better choices for students, and that's especially true for low-income students, first-generation students, students of color, who are disproportionately likely to be left with debts they can't afford to repay. We believe it will improve the value of programs, and we're listening very carefully to affected communities as we consider comments on our proposal.
Are you measuring growth or just final income as they get out?
I'm sorry, sir?
Are you measuring the growth, what income they had going in and what they had going out? Because that would address some of the problems.
The proposal looks at, compares earnings to earnings of high school graduates in the same state. And we will carefully consider whatever comments we get from you and from others. That proposal is now out for public comment.
Thank you. Now I recognize Mr. Moran.
Thank you, Mr. Chairman. Mr. Cordray, you've been handed a two-page document that's in front of you. Take a look at that document for a moment. I understand that that is the online loan cancellation application. Can you confirm that that's correct?
Yeah, it looks familiar to me. I haven't seen it in a number of months, but yes, I would assume that's what I'm looking at.
Good. Mr. Chairman, I'm going to ask a couple questions about that, but I'd ask for unanimous consent to have this two-page online loan cancellation application entered into the record.
Without objection.
Mr. Cordray, my questions are as follows. First of all, do you believe that this form in particular is sufficient for determining eligibility and for verifying the income status of applicants so that we can avoid waste, fraud, and abuse in the loan cancellation program?
We made that determination after consulting with legal counsel and looking at prior applications and the like. So this is what we concluded.
Recently, the Comptroller General testified to the Oversight Committee that state and federal agencies that rely on self-certification on income levels, quote, are open to significant fraud risks and observed, quote, reliance on applicants' self-certifications can make a program more vulnerable to exploitation by criminal actors or ineligible applicants. Do you agree or disagree with the Comptroller General in his testimony?
Well, I'm not competent to exercise the Comptroller General's duties, but I would say a couple of things. One of the things that we set up to do with this application was to do sampling and to sample based on risk so that we could root out potential fraud. That's something we try to do with most of our programs. I will also say
so let me ask you about the rooting out of the fraud. How many folks do you have specifically assigned to verifying the information that's provided on this application, which merely asks applicants to certify just by checking a box that the information is correct?
Well, we've been stopped in our tracks here, as you know. Court orders have blocked this from going forward. We're frozen, and so it's not really an apt question. But I will say that self-certification is something that during the pandemic, the department under the prior administration and this administration decided was the most appropriate way to proceed because of the various difficulties and impracticalities of the pandemic during that time.
So back to my question, how many would you have planned, or how many did you have planned to do checks and audits on the applications that were going to be submitted?
So it was going to be on a sampling basis, which is typical of these programs. And I'm not sure if that was even finally worked out as the program was being developed when it was stopped by the courts.
How difficult would it be to add a requirement to attach a tax return from a prior year, or to have some cross-check on financial aid documentation from the original loans applications that these students made?
It would create difficulties and impracticalities for a lot of people. It would certainly slow down and bureaucratize the form in ways that were not desirable. However, one of the things we're doing is we're working with the IRS, which is not an easy working relationship historically, but it's worked better more recently for us to develop the ability for people to apply automatically to have their tax information provided to the department for verification purposes in several areas.
I know that in several other areas of the government, when you submit information, you've got to do this facial recognition and this real ID scenario where you get online and you show your driver's license. Have you guys discussed whether or not you should do that to avoid any waste, fraud, or abuse?
This is something we work on with our information technology office, who are quite sophisticated all the time in terms of bringing us up to date, both the department and FSA's IT. And these are things that we will continue to consider into the future, absolutely.
Switching directions on questions, would you agree with me that to make an informed financial decision for students going into college, that they really need to look at the total cost of their degree program, the total cost of the university, tuition and fees and housing, the ultimate salary they're going to get back from that degree program once they graduate, what their monthly payments are going to be, to understand what kind of debt they should take in?
I would agree with you that I think people would always be better served to be better informed before they make big financial decisions. And one of the things that we're trying to do through the college scorecard is provide more information up front to applicants as they think about where to go to school and make choices that they can make that they may not understand and might regret later.
All right. I see my time is out. I had a lot of more questions for you, but I appreciate your time. Thank you, Mr. Cordray.
Thank you. I'd like to recognize now Ms. Jan-Paul.
Thank you, Mr. Chairman, and thank you both for your testimony and for your long work on critical issues to ensure that education is accessible for everyone across the country. For working families, post-secondary education, including trade schools and community college, represent a pathway to economic security. But the cost can be just so out of reach for so many, even after receiving Pell Grants. In fact, 60% of Pell recipients still receive federal student loans. And although students rely on loans to make the difference, higher education has to always be worth its economic benefits. The burden of student loan debt makes that very difficult to achieve, even for those without a bachelor's degree. 1/3 of borrowers have debt, but no degree. And I appreciated the earlier conversation between Mr. Cordray and my colleague across the aisle about the importance of trade school, any kind of higher education, trade school, community college, absolutely critical. We are talking about higher education that provides additional skills for people to be able to make the best of themselves and contribute to the economy. So let me start with Undersecretary Kwal. We both know how transformational a degree or certificate is for working families and how student debt limits those benefits. And I thought it would be helpful today to just run through why student debt has emerged as the crisis that it is. How much have college costs risen over the last 20 years? Your microphone.
Beg your pardon. At some colleges, costs have doubled or even tripled.
And have federal investments in keeping higher ed affordable for low and middle income families kept up with those trends?
They have not. The purchasing power of the Pell Grant has declined steadily in recent decades.
Do you know what that percentage is in terms of Pell, what it covers?
It's currently roughly a quarter of the cost of attending a public four-year university.
It's actually gone from 75% of cost to 28%, I think, if that's correct.
That sounds correct.
And if the federal government hasn't kept up with rising costs, then what about state investments?
Well, no, states have substantially cut back on spending on public colleges and universities, which is where 3/4 of our students go.
I know that when I was in the Washington State Senate, we looked at the fact that the state used to cover 75% of a public four-year college, and we were down to about half. Now, we increased some of that spending while I was there. So basically, while previous generations have enjoyed federal and state investment in keeping higher ed affordable, today's students are paying more, not because they're irresponsible, not because they did something that they didn't intend to do, but because the government has slowly reduced our contribution to keeping it affordable. Many of my Republican colleagues opposing President Biden's plan of canceling up to $20,000 in student debt have actually enjoyed those investments from the federal government to get their degrees, and in some cases, they paid 3 times less what college costs today. Republicans had no problem prioritizing $757 billion in PPP forgiveness, where half of those loans went to the top 20% of richest families, and $22 million to at least 12 Republican members of Congress who are currently opposing student debt cancellation. If Congress made those same investments in keeping higher ed costs low for working families and helping them avoid student debt, Mr. Kwal, how would that have impacted the economy?
Well, we would presumably have many more students with college educations, all types of colleges, as you noted, trade schools, four-year colleges, advanced degrees, and that would create greater economic growth, greater shared prosperity, and an economy we would all benefit from.
An economy where we all benefit. I want to just respond to some of the comments made earlier by my colleagues that we must treat all institutions the same regardless of tax status. My colleagues across the aisle have repeatedly suggested that it's somehow unfair or unwise to apply accountability standards solely to for-profit institutions, but that argument completely undermines the reality or ignores the reality that the sectors already operate under very different oversight and accountability structures. States have direct governance authority over public institutions, and private nonprofit institutions are operated by trustees who are legally committed to the public interest. Only in the for-profit sector can college leaders benefit personally from the operations of their institutions. So I see that my time is almost out, but let me just quickly ask. The Department of Education has recognized their responsibility to prevent abuses of taxpayer dollars by proposing a new gainful employment rule. How would this rule ensure that federal student aid dollars like Pell and direct loans help working families and strengthen our nation?
Well, it would set standards for earnings and for debt affordability at career programs and for-profit colleges, and we expect to see colleges improve the value that they're offering students, and if they can't, students have better choices elsewhere.
Great. Thank you very much. Mr. Chairman, I yield back.
Thank you. Mr. Williams?
Thank you, Mr. Chairman. Mr. Cordray, approximately how many families fill out the FAFSA form each year?
It's in excess of 10 million. I think the last number I saw was 10.8 million, but it varies from year to year, but it's in that range, very high number of people.
In your testimony, you said it was 18 million students. Does that sound right?
No, I did not say that.
Okay. Nearly 18 million students in thousands of schools use the FAFSA form to help access and award financial aid every year?
Oh, I see. I'm sorry. The 10.8 million was the number that had been submitted to date this year. So yes, it is a higher number. It was 17 million in the last FAFSA cycle.
Great, thank you. And you have been charged with a modern... Sorry?
Could I speak to that just for a moment?
No, but
Okay, all right.
forgive me. It was just
That's fine. That's fine.
you know, point of scale. So,
Okay.
you have a modernization mandate that promises to streamline this application process. I saw from over 100 questions down to 18 in some cases. Are you on schedule to meet Congress's mandate for the timeline for the release of this new platform?
We are. This has been a huge, massive shift for FSA. It involves numerous computer systems. It involved retiring a 47-year-old mainframe system. Last year, Congress extended the period by 1 year, which was greatly appreciated and really needed by us. But yes, we're on target to deliver this by the end of the year, and we are bound and determined to do that.
So what's the date of the FAFSA system will go live for the 2024-2025 application?
It will be during December of this year.
What day specifically? I'm a FAFSA family, and I know the anxiety of the timing, preparation, and insecurity that families face as they try to put together the financial picture. What, after a home is probably their single largest investment. And so can you be specific, please?
Yeah, and you're not alone. There's many, as you say, FAFSA families across the country.
And I speak on their behalf. That's why I'm here.
Sure. And we're not prepared to give a specific date because we're still trying to pull it forward as much as we can. We would hope that it would be earlier in December rather than later in December, and we're working week in, week out to see what we can do to pull that schedule forward. So I can't give you a specific date, but we can focus in on it. It'll be sometime during December, which is actually consistent with historical practice. So.
I come out of the tech industry, and I like to quote Steve Jobs, who says, "Artists ship. People that code ship. They ship a product.
Yep.
They put a date and they meet that date. And again, 17 million families actually hinge on that date, and a specific date is required. I've seen several of the advocacy groups, bipartisan, just people that are interested in financial aid for students and helping families, have called for this to go live on October 1st. Are you saying you're not going to meet an October 1st deadline? Or
we have made it known that this will be during December. That's what we'll be able to do this year. It'll be back to October 1st next year. Historically, it was during December. The last few years, it's been October 1st, and next year it will be October 1st again.
Just shifting here, Mr. Kwal, it strikes me that part of your organization is what's known as a performance-based organization, that bonuses are met out and paid to senior staff, including the Chief Operating Officer of FSA, which received a $46,000 bonus in 2021. Do you regularly approve performance bonuses for employees that don't meet congressional mandates and timelines?
Well,
is that a policy of your office?
Federal student aid is a performance-based organization, and Congress has authorized us to award performance-based bonuses to senior officials in FSA, and that has been the practice in administrations of both parties going back, I think, until the late 1990s.
I assume that performance is part of the determination of the performance bonuses. Is that correct?
It is, and I assess Mr. Cordray's performance and set his performance bonus.
Is delivering the service on time in a timely manner to 17 million American families, is that part of your performance criteria?
Well, I'm very confident in Mr. Cordray's ability to manage this transition. What Congress has assigned us is a substantial overhaul of the formula, the terminology. It will be substantially simpler for families and schools, but it's a major transition, not only for us in retiring major data systems,
I'm afraid my time's expired, but 17 million families will have a lot of anxiety until you meet your deadline and your commitment. I hope you'll consider that. Thank you.
We will. Thank you.
Thank you, Ms. Macbeth. Yes, still hit it.
Thank you, Chairman Owens and Ranking Member Wilson, and thank you so much to our witnesses today for your expert testimony. I must say it's a little bit disappointing to me to see my Republican colleagues kind of double down on their commitment to preventing working families from really getting the support that they deserve. Our Republican colleagues have no problem using PPP loans and other taxpayer dollars for their own business ventures, but sing a different tune when they see nurses and teachers that are actually struggling to pay even the interest on their principal loans. There are over 122,000 real people in my district in Georgia that qualify for some sort of student debt relief, and more than 80,000 who applied for these funds or were automatically approved and are counting on them to come through to assist them in handling the increased cost of their college educations. One of the most obvious factors contributing to these rising costs and the amount of debt held by our students is the trend of decreased public investment in our higher education systems. Nowhere can we find a better example of this than in my home state of Georgia, where the average debt per borrower is the third highest in the nation at over $41,000. At the beginning of the pandemic, the University System of Georgia, also known as USG, sustained a 10% cost cut of roughly $230 million that was never restored. The state recently went even further and cut an additional $66 million from next year's budget, specifically dedicated to USG. I've met with many different university officials, and they continue to express the concerns about what these cuts mean for their ability to retain and recruit staff, serve in-state students, and avoid having to increase tuition, which they have been very clear that they do not want to be forced to do. Sonny Perdue, the former Trump administration Secretary of Agriculture and current Chancellor of USG, was open about this decision and the negative impact that it will have on families in Georgia. And I quote him, he says, "This is an incredibly disappointing outcome. It will have a significant impact on institutions and the services that students and families depend on to advance their prosperity and help Georgia succeed," end quote. USG's recent press release, which I have right here, included a table showing the direct impact that these cuts would have on state funds of our universities. And I'd like to also, if Chairman, I may enter this into the record. It shows almost a $12 million cut from the University of Georgia, an $11 million cut for Georgia Tech, and over $8 million cut for the largest public university in Georgia, Georgia State University, and a $1.6 million cut for Georgia Gwinnett College, which is actually housed in my district. These continued cuts will negatively force schools to make up the revenue elsewhere or be forced to raise prices even further for students and families. My colleagues claim that the American people are fiscally irresponsible, but those are not the Georgians that I know and that I represent. The fact of the matter for most Americans is that the only way to afford school is to take out a loan, which I'm sure many of my colleagues here in Congress have actually had to do. We tell people every day that one of the best ways to get ahead is to get an education, and then we're now punishing them for trying to partake in the very thing that we want them to be doing, obtaining the skills that are necessary and vital to move their families and our country forward. Mr. Kwal, can you discuss the negative impact that decreased public investment and continued cuts to higher education budgets have on our students and our public universities?
Thank you. I appreciate learning a little more about how state budget cuts are affecting your constituents, and unfortunately, it is not an uncommon story. We have seen for decades now states cutting funding for public higher education, particularly during recessions, and not putting the money back, and that has been the single biggest factor in rising tuitions at public colleges and universities, with particularly large increases in borrowing during the Great Recession.
Thank you, and I yield.
Ms. Hodgson.
Thank you, Mr. Chairman. Thank you to the witnesses for testifying today. According to the Committee for Responsible Federal Budget, the administration's most recent extension of the pause boosted inflationary pressures, the pause on student loan repayments, increased inflationary pressures by 15 to 20 basis points, which they estimate could translate into 1 or 2 additional rate hikes by the Federal Reserve. One of the things that the Biden administration has recently said is, quote, "We're extending the payment because it would be deeply unfair to ask borrowers to pay a debt they wouldn't have to pay were it not for baseless lawsuits." Republicans and economists have criticized this plan to write off debt at the expense of taxpayers in the Biden plan. So my question for Mr. Cordray is it fair to ask taxpayers who never chose college to pay for the Ivy League degrees of others?
So the debt relief that the administration put forward as the Undersecretary has noted, is aimed at lower and middle income borrowers. 90% of the relief would go to those who make less than $75,000 a year.
Mr. Cordray, it's noted that the pause benefits high-income borrowers and graduate students. For instance, a typical law school graduate will effectively receive an estimated $65,000 in loan cancellation, accounting for inflation and forgiven interest, compared to $7,000 for someone who borrowed for community college. Is it fair for borrowers of community college to receive a $7,000 forgiveness payment or for forgiveness versus a law school graduate who will receive an estimated $65,000 in cancellation under the Biden plan? Is that fair?
So the payment pause was implemented.
Just answer if you believe it to be fair or not, please.
I'll just give you a little background. The payment pause
If you
was
could just
implemented.
answer if you believe it to be fair or not.
Apparently, the prior administration determined it to
I'm
be
going to
fair
reclaim my
because they
time and ask
implemented it.
an additional question. Is it fair that 2/3 of those of the benefit would go to the top half of earners?
I don't believe that that's consistent with what I have seen. But again, the payment pause was put in place by the prior administration, extended by them 3 times. It's been extended by the Biden administration on the same terms 5 times. So as to whether it's fair, I'll leave that to others, but both administrations have deemed it to be a necessary measure during the pandemic.
Thank you. Overall, the repayment pause has cost taxpayers $195 billion to date and $5 billion each month it is continued. The continual extension of the student loan payments, the actions of the Biden administration alone have cost more than the federal government has spent on higher education over its entire pre-pandemic history, $744 billion from 1962 to 2019. It's estimated that the student loan bailout could end up costing taxpayers more than $1 trillion. I want to just switch gears a little bit to the income-driven repayment plans. Mr. Cordray, there was a 2019 Government Accountability Office report which identified misrepresentation of income and family size indicators for potential fraud or error in the income-driven repayment plans. Are you familiar with that report?
That was before my time, but I have general awareness of it.
Okay. The GAO found that about 95,100 income-driven repayment plans were held by borrowers who reported 0 income, yet earned enough wages to make monthly student loan payments. Borrowers with these 95,100 income-driven repayment plans owed nearly $4 billion in outstanding direct loans. As to family size, about 40,900 income-driven repayment plans were approved based on large family sizes of 9 or more, which are atypical for income-driven repayment plans. This raised some questions, and GAO also found 2 income-driven repayment plans that were approved in which a borrower reported family sizes of 93. Borrowers with atypical family sizes of 9 or more owed almost $2.1 billion in outstanding direct loans. Given the potential for fraud, which has been known since 2019, the GAO recommended the department take certain steps to better verify income and family size. We know that you're working on the implementation of the Future Act. Do you believe it's important to enact verification procedures on these repayment plans since we know they're prone to fraud and error?
Again, you're referring to a report from 2019, well before this administration, but I will say that we do think verification is important, and where practical, we are going to implement it. During the pandemic, it was difficult at times to do that, but coming out of the pandemic where we can implement verification and sampling, we definitely will do that because we think it protects students and families and taxpayers, as I think is your concern.
Thank you. I yield back.
Thank you, Ms. Ledger Fernandez.
Thank you very much, Chair, and thank you so much for testifying here today. You know, I find we're at such an important moment this week where we are seeing 2 really clashes of worldview of what we need for America to thrive. The Democrats' view is that we must invest in those things that give the biggest return. And one of the greatest investments we can make is in our children's education. It's in our students' education, whether that education be leading to a degree in nursing or an apprenticeship in welding, installing solar fields. It's like that idea of investing in our students is so key, whereas on the other side, we see an intent to disinvest, to cut funding for education so that they can protect tax cuts for the wealthy, so they can benefit and prioritize the largest corporations. And we need to remember that that is what we are facing this week, a decision on who do you want to invest in, the wealthiest, the corporations, or our own students. And I am so grateful that you are here talking about the importance of investing in our students. Another one of these things that just does not seem to make sense to me is that there's this idea of correlation and causation, that somehow Pell Grants and federal assistance has led to increase in education. Mr. Kwal, until the Democrats increased the Pell Grant over the last 2 years, when was the last time this program saw a substantial increase?
It had been a decade or more.
Yeah, so several decades. During that decade, did cost of education go up?
It did.
So we were not increasing the Pell Grant, one of the key ingredients for working families, for poorer families, for those who have ambitions but have obstacles in those ambitions to realize. We had not increased it at all, but yet higher education went up. Tell me why it is important to increase Pell Grants for the students who need it most.
Well, Pell Grants are one of the most effective tools we have to help more students enroll in college and complete in college. They serve 6 million students a year, and research shows that they're a wise investment, that actually we eventually get the money back in terms of tax revenue. So solely on the basis of taxpayers, it has a positive return.
So this is another example. What do you invest in and how does it benefit our economy? And you just made that link, and that's actually based on research, not this speculation, this Bennett hypothesis. Are there, which I don't think there's actually any convincing evidence that this is real. Is that correct?
I have not seen any evidence that Pell Grants increase tuition.
Right. So it's not enough to just say it over and over again. Actually, when you look at the studies, Pell Grants don't increase in tuition, clearly, but they have such a benefit for our economy. I also want to talk about the way our educators need our help. We all know that there is a teacher shortage. We all know that teachers come out, they go into college, they come out perhaps with more debt, and yet they're doing us and our families and our communities such a service by willing to make less money to teach and educate our children. That it should be the most important job in the world. We don't pay enough to our teachers, clearly, right? But I actually believe that we should do more for our teachers, and one way to do is the Loan Forgiveness for Educators Act. And that would help address teachers' shortage education and sustain a more diverse workforce by forgiving 100% of K-12 and early childhood educators' student loans in exchange for 5 years of eligible service. Mr. Cordray, would you support this kind of legislation? Why is it important?
So I believed in public service education for decades. And in terms of the Public Service Loan Forgiveness Program, our attempts to deliver a more effective program, which is what Congress originally did by passing the statute in 2007, have been very important. If there's going to be further look at revamping public service loan forgiveness, we would be glad to work with you on that. And I do think that it has been very important for public servants across the country to see that they can actually get the relief that they were promised, rather than be tangled up in red tape as was happening for years and years.
Right, and this kind of student loan forgiveness that we're talking about for teachers, as well as for the program that was being discussed earlier, it is actually targeting those with incomes largely under $75,000. So once again, we see that we are targeting those with working class incomes, with teachers' incomes, and not the most wealthy. Thank you so much for your questions, and thank you, Mr. Chair, for the time.
Thank you so much. Appreciate that. I'd like to recognize Dr. Fox.
Thank you, Mr. Chairman. I thank our witnesses for being here. And I'm going to ask a series of yes and no questions, so I really want you to say yes or no. I don't want to have to stop you. Mr. Kwal, this committee has requested multiple times, beginning April 30, 2021, that the Department of Education provide all evaluation reports conducted by FI Consulting showing the student loan program was nearly $500 billion in the red before this administration took office. Despite multiple commitments to provide this information, including by yourself in sworn testimony in front of this committee, the department still refuses to comply with Congress. I want to discuss the briefing the department provided the committee on December 17, 2021, to which department staff said they had not seen the entirety of the report and were unable to locate it at that time. Mr. Kwal, yes or no, did the department have in its possession the final evaluation report prepared by FI Consulting when committee staff were briefed?
Well, we are...
Yes or no?
Well, Ms. Falk, I'm trying to provide the best answer to you that I can. We have provided a copy of the unredacted report to Congress and to GAO.
Was the staff in possession of the report at that time?
We've provided an unredacted copy of the report
The answer is yes or no.
Well,
yes or
I'm
no?
trying to give you the best answer I can to the question.
No.
We provided
Well, the answer should be yes, because you had it and the staff did not tell the truth. Mr. Kwal, do you take seriously the requests of Congress, yes or no?
I do.
Do you believe that Congress should receive important information from the department, such as, for instance, the valuation reports we requested, before the department provides them to outside organizations, yes or no?
I believe that the department has an obligation to cooperate with Congress to
yes
provide it the information it needs to fulfill its duties.
Mr. Kwal, I'm holding the final valuation report that we requested, yes or no. Did the department provide this report to us?
We provided an unredacted
Yes or
copy
no?
of the report. Yeah, I believe we did provide an unredacted copy of the report to you.
Are you sure?
Well, that is my understanding.
Are you sure that the department provided an unredacted report? It's very serious, Mr. Kwal. Your answer?
Well, it sounds like you may have information I don't have. That is my understanding, that we've been cooperating fully with the GAO as it studies this model. My understanding is we have provided unredacted information to you.
I think you might need to get better information from your staff. Did the department provide this report to the Student Legal Defense Network, yes or no?
I don't know the answer to that question.
Okay, Mr. Kwal, when did you first receive the final valuation report I'm holding? A date, please.
Well, respectfully, I'm not sure what you're holding. I think you're referring to events that happened.
That report that I said was here, from FI.
Ms. Vok, I'm happy to try to provide whatever information it is that you need.
Okay, there'll be a follow-up then, and we'll expect a prompt response from you. Mr. Kwal, the only conclusion I can draw from your refusal to provide Congress with this information is either you're incapable of understanding basic requests or you simply don't give a damn that you're hiding the true cost of this administration's actions from the American people. Either way, it's unacceptable behavior from the top higher education policymaker in this administration. Now, Mr. Cordray and Mr. Kwal, you've said a lot about your communication with servicers. However, I'd like to submit a letter for the record from the Student Loan Servicing Alliance, who states that when it comes to return to repayment, servicers have, quote, not received final written guidance on the details of the plan of action on the restart of loan payments, not yet been granted permission by FSA to communicate with borrowers about repayment, and seen net reductions in investment and servicing by an estimated $35 million. With all due respect, this department has had almost 2 years to come up with a plan to return borrowers to repayment. And what I'm hearing here is that servicers have no guidelines, no funding, and no ability to reach out to borrowers because you won't let them. At this point, it feels less like incompetence and more like an intentional ploy to break the student loan program and use servicers, Congress, and anyone but yourselves as scapegoats so you can replace it with your radical free college agenda. Mr. Kwal, can you commit to taking personal responsibility if the transition to repayment does not happen smoothly? Mr. Cordray?
Yes, and we have no incentive to break the student loan system.
Are you all going to continue deflecting accountability for your action? And I'll submit this report, Mr. Chairman, for the record.
No objection.
I yield back.
No objection. Thank you so much. I'd like to recognize Mr. Courtney.
Thank you, Mr. Chairman. And at the outset of my time, I just want to again do a quick refresher for my colleagues and some of the people listening to this hearing about the history of the Public Service Loan Forgiveness Program as well as the Income-Driven Repayment Program, which are punching bags this morning by my colleagues on the other side. Those measures were passed as a result of the College Cost Reduction Act in 2007 by a bipartisan majority of 292 votes in the U.S. House of Representatives, was signed into law by a Republican president, George W. Bush. And in the case of PSLF, as Mr. Cordray said, it was a bipartisan agreement that we should reward people who put community above their own personal interest. And unfortunately, when we fast forward to 2017, when the first cohort of people who had literally changed their life trajectory because of that incentive, ran into a department run by Secretary DeVos, who did almost everything possible to really obstruct people's discharge of those loans. And that's not me saying that. That's the Government Accountability Office. I have a report, Mr. Chairman, from 2018, which recorded the fact that out of the 890,000 borrowers who took the initial step for discharge, a whopping 55 borrowers had their loans discharged. Again, and the report just pins the responsibility on the department under her leadership. A second report actually focuses on military service members who also qualify for PSLF. Same thing, a 94% denial rate for discharge for people who wear the uniform of this country. Finally, in 2019, there was a lawsuit filed to force the department to change, and the Politico story, the title of it is DeVos Sued Over Student Loan Forgiveness Program That Denies 99% of Applicants. Mr. Chairman, I would ask that those GAO reports in the Politico article be admitted to the record.
No objection.
So when these two gentlemen were sworn into office, ably assisted by our former colleague, former Representative Gwen Graham, again, you were basically left with a program that was almost in a shambles in terms of trying to restore the promise that was initially made in 2007, and I know that from constituents who were running into that stone wall. And again, I think we look at, again, the pace of discharge that's picked up since you guys, along with Secretary Cardona, have really tried to fix the plumbing of this program. Obviously, we're in the hundreds of thousands of people. I would like to focus particularly on one group, which is, again, people, the military service members, because, again, the prior administration basically treated service members who were serving overseas eligible for deferment in terms of their monthly payments as non-qualifying months for discharge under the Public Service Loan Forgiveness Program. And again, to both of you, thank you for recognizing what I think every American believes is that those should be qualifying months for discharge. And again, if you could talk for a second about the system that you put into place to help those families.
Could I speak to that just for a second? One of the things we hope you'll understand is that when we talk about public service loan forgiveness, we're talking about, for example, the people on each of your staffs who you know to be dedicated public servants working on the public interest, may disagree about this or that political issue, but they're working hard to serve the people of this country. Those are the people who should benefit and do benefit by this program. And we've taken a number of steps to improve the program, to untangle the red tape, to make it work. And we hope that more young people who are right now in high school or college will think about public service careers now that they know that this is an alternative that is real and not just talked about.
Great, thank you. And again, Mr. Kwal, if you could talk again about our military service members.
Well, I appreciate the example. As you say, a borrower on a military deferment could be serving in active duty overseas and not have those months count toward public service loan forgiveness. So I'm very proud that the administration has taken the number of approvals from a very, very small number to more than 600,000 today. recognize we have more to do to help public servants who are making payments on their loans, who are serving the public for 10 years or longer, to get the benefits that they've earned, and that includes new partnerships with the Department of Defense.
Correct. Again, I have 9,000 sailors in my district who go on at least 6-month deployments on submarines. It is very disruptive to their families, and again, this is a huge boost in terms of their situation. Interest recapitalization, again, you've reformed that. In 20 seconds, can you describe what that means in terms of stopping the growth of debt?
Yeah, so one of the big problems we hear is that borrowers see their loans get bigger and bigger and bigger as the years go by, even as they're making payments. And one big part of the problem is interest capitalization, or moments in which borrowers have to start paying interest on interest and their loans increase exponentially. So we have taken a look at what those requirements are, and where we didn't feel it was necessary to impose that on borrowers, we have eliminated that interest capitalization. That will save borrowers substantial amounts in the coming years.
Thank you. I yield back.
Thank you, Mr. Good.
Thank you, Mr. Chairman. Again, thank you to our witnesses for being with us here today. Mr. Kwal, your title as Undersecretary indicates you report directly to Secretary Cardona. Is that correct?
I do.
Okay. So I would presume it's fair to say that you and the Secretary communicate regularly, on a regular basis, I should say, particularly as it relates to major post-secondary education policies. Would that be correct?
Yes.
Would these conversations have included conversations related to the President's debt relief plan, as it's been called, that was announced on August 24?
Well, I don't want to get into specifics of private conversation, but as you say, we regularly communicate on major higher education policy issues.
Would you have discussed this plan before it was announced on August 24?
I mean, I don't want to get into details of specifically what I do and don't provide to the Secretary, but again, I do regularly.
So he would not have included you in conversations about this at all?
No, that's not what I said. I said we talk regularly on major higher education issues.
When was the decision made to move forward with this student loan transfer scheme that was announced on August 24? When was the decision made to do that?
I believe the Secretary signed that memo on August 24.
When was the decision made to do it?
Well, the official action was the Secretary's signature, which was on August 24.
When were you made aware of the decision? Were you surprised when you heard about it on August 24, or did you know about it before then?
I was among the group of people who were involved in preparing that decision memo for the Secretary.
Because you had conversation with the Secretary about that decision?
Well, again, I'm not quite sure where you're going.
I want to know when the decision was made, or when you learned of the decision that was made that was announced on August 24.
Well, the Secretary signed the
The
memo.
American people have the right to know that, a decision like that would have such tremendous impact.
I mean, the decision was official when the Secretary signed the memorandum on August 24.
All right, who was the person who ultimately made the decision that was announced on August 24?
The Secretary.
Secretary made the decision.
That's correct.
That was announced on August 24. So it was Secretary Cardona who was ultimately responsible for making the decision to move forward the debt relief plan, or what I would call the student loan transfer scheme that was announced on August 24. You've just confirmed. But Secretary Cardona was quoted in a June 2 political article, saying that he was ready to roll when the White House reaches a final decision on broad-based student debt relief. But you said it was Secretary Cardona who made that decision. He said he was ready to roll when the White House made a decision on, as quoted on June 2. On July 28, according to another Politico article, documents were provided to the media showing how FSA was prepared to provide loan cancellation, but the article states, quote, "The Education Department documents do not reflect any final decision on how the White House may ultimately choose to structure debt relief, and that Biden plans to decide by the end of August." The comments in the press by Secretary Cardona make it sound like the final decision and timing for the debt transfer scheme were made by the White House as opposed to the Secretary. Your testimony here today is that it was made by the Secretary. Also, according to an August Washington Post story, the President's decision, quote, to go big on student loans was based on discussions with over 20 senior White House officials, radical pro-cancellation advocacy groups, and other key officials, but the article does not mention Secretary Cardona's name regarding the decision to transfer payment responsibility for student loans. Doesn't mention Secretary Cardona. In addition, Solicitor General Elizabeth Prelogar argued at the Supreme Court that the debt scheme decisions were indeed made by Secretary Cardona, which again, you confirmed today. But based on what administration's officials were telling the press at the time, this mass student loan transfer scheme has never really been about the Secretary's authority to provide emergency relief because in fact, the Secretary himself said previously he didn't have the authority to do this, or there was no authority for the administration to do this, as did Speaker Pelosi, as did President Biden. Himself had said previously they didn't have that authority to do it. But this has always been about a political agenda. And I would say that's consistent with the timing of this announcement that was right before the midterm elections, which is interesting timing to announce that you're going to transfer student loan debt from those who didn't borrow it, or from those who borrowed it, rather, to hardworking taxpayers who did not borrow it. And so I appreciate you confirming today that was actually the Secretary's decision, not the President's decision. But thank you, and I yield back my time.
Thank you. Ms. Bonamici?
Thank you, Mr. Chairman, and thank you, Undersecretary Kwal and Mr. Cordray. Thank you for your years of service in this important area. The student debt is often talked about as a crisis, and it's a crisis holding people back. And it's a direct product of a broken system that fails to recognize the value of investing in education. I want to note an important fact following up on Mr. Courtney's questioning, and the numbers I have are from 2021. Borrowers who were current on their payments still held more than $1 trillion in loans that were equal to or greater than their original balance. And thank you for explaining that, Undersecretary Kwal, that these are people who are making payments but not making progress because of that combination of interest capitalization, negative amortization. And we know this is going to persist if the Biden administration's reforms are reversed, and our nation's most vulnerable borrowers will be even more susceptible. So I acknowledge that we need to change the system. My colleague, Representative Ledger-Fernandez, was talking about that, change the system going forward so students can go to college debt-free. But today, I want to urge my colleagues on the other side of the aisle to participate in a good faith discussion and focus attention on how we can support borrowers during the transition to repayment and implementation of new regulations. In January, I reintroduced my Student Loan Borrower Safety Net Act. This legislation would require the department to provide earlier, more frequent, and targeted outreach to borrowers about the resumption of payments, because we know that's going to happen regardless of what happens at the Supreme Court. There will still be a lot of borrowers who need to repay, simplify their ability to enroll in affordable repayment plans, and provide other critical protections for borrowers who are unable to resume payments or miss a payment for whatever reason. So Undersecretary Kwal and Mr. Cordray, as I mentioned, regardless of what happens at the court, many borrowers will still need to begin repayment, and as that return date approaches, what steps is the department taking to communicate with borrowers to help them restart payments, to guarantee that student loan servicers have the information they need to best support borrowers?
So this is something that we've been looking at and working on for quite some time, even before the debt relief was announced and before the case went to the Supreme Court, although it's certainly complicated matters to have that pending, creates a lot of uncertainty for borrowers, and we don't want to be confusing in the guidance we're giving them. But we have been working with the servicers for a long time, knowing that return to repayment would come at some point, having plans that were developed and then put on hold as pauses were extended. Been a bit of a zig and a zag at times, but we continue to work on that. We now understand that it's going to be happening later this summer, and servicers are rightly concerned that they want to make sure they're communicating appropriately with borrowers. Of course, they communicate with borrowers every day. They get incoming communications from borrowers. They talk to us about them. We work those through with them, et cetera. So we also have been communicating both publicly and through social media and lots of different outlets about the fact of the dates of return to repayment and what student borrowers need to do to get ready, that they should be on auto pay if they can make their payments, that they should get into an IDR plan if they cannot. And due to the Undersecretary's work in particular, IDR plans are going to be much improved going forward. And we want people to be aware of that because they was not necessarily their experience prior.
Yeah, I want to follow up on that. I appreciate the department's proposed rule on changes to improve the income-driven repayment program, something I've been working on for a long time, including amending the terms of the revised pay-as-you-earn plan and streamlining the IDR program to make payments more affordable. So the proposed improvements will help borrowers stay afloat and pay their loans back in a timely manner. So Undersecretary Kwal, I have a two-part question. What are some of the most promising components of this proposed rule? And the second part is, how will these changes benefit both current and future borrowers?
Thank you for the question. So the proposed plan would be the most affordable student loan repayment plan ever. One challenge we have is that low-income borrowers often say their payments are unaffordable. Under the proposal, there would be no payments under $32,000 a year for single borrowers. That's about $15 an hour. Above that, we would cut payments in half for undergraduate borrowers. So it's a substantially more affordable repayment plan. We think it will help people avoid delinquency. We think it will improve their overall financial health in their first years out of college, benefiting their families and their communities. And it's a plan that will be available to future borrowers and also to past borrowers.
Thank you. And in my remaining few seconds, what can we tell our constituents who are asking us about what should I do about the fact that my loan balance now is greater than when I've been making payments, but my loan balance is greater than when I took out the loan? What's the best thing to tell them?
Well, we're encouraging them to stay in touch with us to make sure that they take advantage of whatever benefits we have available. And we've identified more than 2 million people eligible for loan forgiveness but had never applied. There are more out there. And then borrowers should make sure that they are exploring their repayment options, that they're in the most affordable repayment plan for them.
Thank you. Just thank you for emphasizing that there are many people out there who have actually made payments. Sometimes it sounds like from my colleagues on the other side of the aisle that there are people who haven't made any payments and now they're getting this debt relief. That's just not the case. Thank you, Mr. Chairman. I yield back.
Thank you, Ms. Spinks.
Thank you, Mr. Chairman. Mr. Cordray, under the Trump administration, the department's Office of General Counsel opened 19 investigations per Section 117. Those investigations alone found $6.5 billion in previously unreported foreign money, including over $1 billion from anonymous donors from China, Russia, and other adversaries to universities in the United States. Has the Biden administration Department of Education opened any new investigations looking into Section 117 noncompliance? Any at all?
So I can't speak to the specifics of current investigations, but I can say, as you noted, that there were investigations opened during the final year of the Trump administration when they finally got going on this. It has been our job, as I understand it, to manage the disclosure of this information, where schools on average are now reporting 3,000 more foreign gifts and contracts a year under this administration than was true under the previous administration. And we continue to work through our process that included the disclosure of more than 34,000 foreign gifts and contracts. It's a very serious problem. I agree with you very much on this and the need for attention to it that have been disclosed under Section 117 under this administration.
Yeah, but really, not a single new investigation opened by this department.
No, I did not say that. I said I can't speak to current investigations. It would be improper. Those are law enforcement matters.
They're reported. So either you've opened new investigations or you haven't opened any new investigations.
But we have continued with investigations, and we've been working on investigations.
So ongoing investigations opened during the Trump administration, but no new investigations in the Biden administration.
I did not say that. No. I said that I can't speak to the details of investigations.
Either you don't know or there aren't any. No. I mean, that's a simple question.
Well, I said I can't speak to the details of investigations, law enforcement matters. However, what I will say is we are working collaboratively with law enforcement agencies, including the FBI and others, and that is going to be the right place to investigate actual wrongdoing that might be occurring under the program.
I actually think you haven't opened a single new investigation because I don't think it's a priority for your department.
Well, I'll tell you.
I actually think that. Let me. And this being an oversight hearing, prove us otherwise.
Well, let me respond specifically to that. We just saw news. I think you saw it too over the last couple of days about Berkeley and perhaps not having complied with the 117 disclosure requirements. We will be looking into that if, in fact, the facts as alleged, and they're just allegations, there are a lot of ifs in that story, but if, in fact, those facts turn out to be correct and they did not report properly, that'll be a violation, and we will refer it for appropriate action.
I'm glad you brought that up. I was going to ask you about that because I sent a letter to Secretary Cardona this week about UC Berkeley's failure to report really a staggering $220 million donation that it received from our biggest adversary the Chinese Communist Party. So if it does end up being true, I mean, what is your department doing to make sure that something like that doesn't happen again?
Well, the first thing
aside
is,
from just reporting
first thing is, as you noted, it just came up this week. And that is something we would definitely be looking into. We will investigate if, in fact, they failed to report when they should have, and that may be the case, but we don't know yet. Then we will refer it for appropriate action by the Justice Department or whoever should take that action.
On April 5th, myself, the chairwoman of this committee, Dr. Fox, 20 other members of this committee sent a letter to the department asking several very simple questions about how the enforcement of Section 117 would even occur now that it's FSA's responsibility, and we still haven't received a response from you. Is there a reason that the response has letter on April 5th, no response?
I can speak to that with you right now if you'd like, which is there's two pieces of this. One is a disclosure piece that is required of the schools. We're not sure that they've all been in compliance with that in the past. FSA is now taking that over. It's very similar to our Clery Act disclosures that we require schools to make. Actually, Congress requires schools to make, and Congress requires it here. And we will make sure that that is being done more uniformly across the board. But if there are law enforcement matters that arise out of that...
I don't have a lot of time, but are you committed to responding to our letter? 22 members of the committee? I mean, it's a simple letter, simple questions, letter sent on April 5th. Are you committed to responding to the majority of members of this committee with a letter that was sent to you on April 5th?
If we have not done so already, we will go back and work with your staffs to make sure you have the information you need.
Mr. Banks, if I may, I believe I have signed a couple of letters on 117. I'm not sure about April 5th, so we can go back and look at that, but we're regularly providing information on 117 and happy to continue to do so.
Thank you. I yield back.
Thank you. Ms. Adams? Ms. Adams?
Thank you very much, Mr. Chairman, and to our ranking member as well. And thank you, gentlemen, for being here today and for responding to our questions. You know, we've had so many comments about taxpayers and the dollars that they'll be spending. And, of course, I haven't heard any objection from my colleagues on the other side of the aisle about the 2017 Trump tax cuts or the tax breaks, and that the cost to our taxpayers would be over $2 trillion. I mean, I'm concerned about that, but I guess other people are not. But let me just remind folks of W.E.B. Du Bois and the comment that he made about education being a fundamental right. As a former educator, having taught 40 years, I truly believe that, and I am very disheartened that my Republican colleagues don't seem to want to assist borrowers who are in default and thus denying them that fundamental right. We've had some discussions, gentlemen, about the Operation Fresh Start, and so I want to ask a couple of questions. I think it's a great program. I think it provides a fresh start. Really, I'm sure that's where the name came from, and an opportunity for these borrowers to be able to who are in default to reenter repayment in good standing. But I do want to ask Mr. Kwal why Fresh Start is an important step in addressing the needs and realities of defaulted borrowers.
Well, thank you for the question. At the time of payments being paused, there were more than 7 million borrowers in default, and these were borrowers who were overwhelmingly Pell Grant recipients, first-generation borrowers, students of color, and they suffer severe consequences for being in default, including their loans having much higher costs, and in some cases, punitive measures like loss of driver's license or occupational licenses that can actually make it harder for them to repay their loans. As Mr. Cordray said, planning for debt relief and then a return to repayment involves no one having missed payments over the past 3 years. Everyone is starting with a fresh loan in good standing, and that includes borrowers who were in default.
Thank you for that question. You know, I think we have to realize that we have thousands of folks, and I have thousands in my district, for example, who will, as a result of being able to get some assistance, who will have the ability to live their lives without the looming effects of student loan debt. I know individuals who've spoken to me who are just about in retirement age and still paying student debt, primarily because of the kinds of things that my colleague just talked about in terms of the interest rate. And that's just not individuals in my district. These are folks all across the country, and many of them are represented by my colleagues as well across the aisle. But let me ask you a little bit more about the impact that first-generation college students and low-income students have in terms of the ability to have the Fresh Start program and how it has really impacted them and their financial standing.
Well, I speak to borrowers who have loans in default, and they talk about the tremendous consequences it has on their lives, their ability to save, to buy a home. I spoke to a borrower who told me in tears that she thought she would not be able to have children because of her student loan. And so we need to look at the challenges for people who have been left worse off, for attempting to go to college, for attempting to provide for their families, and offer relief to those struggling borrowers.
Well, thank you for that question. I just want to make a comment about the Future Act, which was a bill that I introduced. It was passed in 2019, and it has been able to assist many borrowers. And I know that this bill, or this act now, has certainly been a part of really helping students. And if you could just make a brief comment about that, Mr. Cordray.
Yeah, it's one of the ways that we're trying to make government work better for people. I mean, you're a former professor and longtime educator, and you know that the point of higher education is to make people's lives better, not worse. And everything that makes the government processes work better for the people they serve is going to assist our country, and that's what we're hoping to do here. And we appreciate the legislative efforts to improve these programs.
Thank you. Education is indeed the pathway. It certainly has been for me and so many other young people, first generation and others. Thank you very much, gentlemen. Mr. Chairman, I yield back.
Thank you. Thanks again, everyone. That we're going to start with our closing remarks now, and I'd like to first recognize Ms. Wilson for her closing remarks.
Thank you, Chairman. And thank you again to Undersecretary Kwal and Mr. Cordray for being with us today. I wish I could say that this hearing reflected a bipartisan commitment to meeting the needs of our nation's student borrowers. Unfortunately, today, my Republican colleagues kept up their unpopular campaign to attack borrowers and their families. And Americans are tired of the Republican double standard that says we can give reckless tax breaks to the wealthy, but not help the borrowers in our districts get back on their feet and contribute to our economy. That is why House Democrats continue working with President Biden to end the student debt crisis and to lower the cost of college. Every American should be able to achieve the American dream by earning a college degree, not just the wealthy few. A student borrower is in most instances a child who is entering adulthood, a child who beat the odds, poverty, foster care, low expectation, life struggles, those who just need a one-time hand up so that they can achieve their goals in life and be somebody. Give them that chance so that they can contribute to society and to our economy. These are children in most instances who attended our schools for 12 years, played by the rules, made the grade, obeyed the law, and just want to be somebody and contribute to our society and our economy. And we should give them that opportunity. Many are first-generation college students who just want to live a better life than the life their parents were able to give them. and then they want to send their own children to college. Even middle-class families who want their children to have a good life have had to borrow more and more to send their children to college. The cost is out of control. There are others who wanted to serve our nation in a more intense capacity, but the cost is astronomical. Researchers who want to find a cure for cancers, doctors in rural America, pediatric dentists for children in need, psychiatrists who want to solve our mental health crisis. And you, as members of Congress, are trying to stand in their way? This is the so-called Education Committee. We should be leading the charge to help our students find relief. We should be the drum majors for student loan forgiveness. I yield back.
Thank you. And once again, thank you for your time here in front of us. I'll just start off by saying the Department of Education has lost its way. We have a system that is absolutely broken, and we're not going in this process until we decide to figure out where the priorities are. The purpose of educational institutions is the success of the student. We've turned that upside down, where the purpose of the student is for the success of the institution. And we need to change that. We have an industry right now that's made billions of dollars, continue to do so, while their customers go billions of dollars in debt. And the only ones that ask to hold any standards are the innovators. There's no sense of outcome processes in this case here, where so many of our colleges just continue to add on debt with no sense of accountability or outcome. Let me talk about that outcome piece of it, because we've heard a lot about attack on the proprietary colleges, the career colleges, and we continue to hear this. These are the innovators. These are the ones that are risk takers. They go out and they build a business, and at the end of the day, they can only succeed when their students succeed. They're HVAC, electrician, automobile, medical assistants, laboratory assistants, physical fitness trainers, nursing, cloud computing, accounting, cosmetology, business digital marketing. And when we look at the debt load we have on our kids today, here's a good example of how some of these young people can get a start without having to think about, number one, being in debt with a degree that means nothing and hating our country at the same time. HVAC, degree costs about $15,000, salaries start around $35,000 to $45,000. Nursing degree costs about $55,000, salaries start between $60,000 to $70,000. I know of institutions that had the minimum graduation is 40%, but I know of a couple that actually up to 80% graduation, and a placement in the field of their study 80 to 90%, and yet these are the ones that are put down. Let's take a look at Northeastern University, $57,000 per year. 2019, there was a study that found that only 11% of black men graduated within 6 years. White students has 5 times more likely to graduate than black students. Nationally, only 1/4 of black men enrolled in community colleges obtain degrees in 6 years. What are we left with? 90% failure with no degree, no job, no hope. I consider that predatory. And there's no sense of concern other than the fact that those institutions that are getting the results seem to be under a stronger microscope and discriminated against. I think it's important to recognize that we need to get innovators to the table. It concerns me very much to hear that Debt Collective is sitting at the front table with you guys. These are people that are about free education, free homes, free health care, free credit card cancellation, basically the concepts of what Marxism comes down to, free everything, and they hate the entrepreneur. And yet they're sitting at your table, in your front row, talking about how to destroy this particular industry. I think it's time for us to really, and this is a good time for us, I think that the pandemic has kind of pulled back the curtains. We have parents now that are asking those questions about return on investment. We have young people now looking at what industry they need to get into to truly make a living and have hope. And I'm hoping that oversight like this will allow us to start moving forward in the right direction. I'm excited about the fact that we do have a chance to have oversight in this regard, and we're going to make sure in everything we can do to get the innovators to the table. We need to disrupt this system, not break it. We need to make sure that people can enter this process, whatever they might want to do, and feel they can come out of the other end more hopeful and more successful. I'd like to thank again our witness for taking the time to testify before us today in subcommittee. And without objections, with there being no further business, the subcommittee now stands adjourned. Thank you so much.